Hey there, meet Sarah. Sarah loves her morning latte. To save time, she doesn't use cash or a credit card at the counter. Instead, she opens her Starbucks app, taps her phone, and walks away with her drink in seconds. It feels convenient, right? It's fast, she gets stars, and she feels like she's winning. But here's a question most people never ask. What happens to the money Sarah loads onto her app before she even buys the coffee? You see, when Sarah puts $50 onto her Starbucks card, she hasn't bought anything yet. She's just exchanged her real government-backed money for Starbucks credits. At any given time, there is around $1.6 billion sitting on Starbucks cards and apps worldwide. That is $1.6 billion of your money that Starbucks is holding onto. In the world of finance, this makes Starbucks more than just a coffee shop. It effectively makes them a shadow bank. In this video, we're going to explain how Starbucks built a $1.6 billion interest-free loan system, why they have more power than some actual banks, the magic of breakage, and what happens if everyone tried to withdraw their coffee money at once. Let's get started. So, when we talk about a bank, what do we usually mean? A traditional bank like JP Chase or HSBC takes your money, keeps it safe, and in return, they might give you a tiny bit of interest. Then, they take your money and lend it to other people for mortgages or business loans at a higher interest rate. That's how they make a profit. But Starbucks found a way to do this that is even better than a traditional bank. Think about it. When you deposit money into a bank, the bank has to pay you for the privilege of holding your money. But when you deposit money into your Starbucks app, you are the one giving Starbucks a gift. Here's why. Zero interest. Starbucks doesn't pay you a single cent of interest on that $1.6 billion. The coffee loan. Essentially, millions of customers are giving Starbucks a $1.6 billion interest-free loan. Starbucks can take that cash and use it immediately. They can build new stores, upgrade their technology, or invest it in the stock market to earn even more money. They don't have to go to a real bank and ask for a loan with 7% interest. They just use your money for free. It's a brilliant financial loop. You get the convenience, and Starbucks gets the capital. But it gets even crazier when you look at what happens to the money you forget to spend. Have you ever looked at your Starbucks app and realized you have $1.45 left? It's not enough for a latte, and maybe you don't go back for a few months. Eventually, you lose the phone, or you just forget about that small balance. In the accounting world, this is called breakage. Breakage is basically unredeemed gift card balances. And for Starbucks, this is a massive hidden goldmine. When a normal bank holds your money, they can't just decide it's theirs if you don't use your account for a year. There are strict laws about that. But Starbucks? If a gift card isn't used for a long time, Starbucks eventually gets to claim that money as pure profit. In 2022 alone, Starbucks reported around $196 million in revenue just from breakage. Think about that for a second. That is nearly $200 million that people gave them for coffee they never actually drank. That's like a massive thank you tip from millions of people, except they didn't even mean to give it. For most companies, a $200 million profit would be a dream. For Starbucks, it's just the spare change left over from their shadow banking system. Now, you might be thinking, okay, so they have a lot of my money, but lots of companies have gift cards. Why is Starbucks special? Well, here is the difference. If you buy a gift card for a local sandwich shop, you probably use it once and never think about it again. But Starbucks has turned their app into a lifestyle. Because of their Starbucks Rewards program, they have created a closed-loop ecosystem. 1. The trap. To get the best rewards, you have to use the app. 2. The deposit. To use the app efficiently, you auto-reload. This means every time your balance hits $10, your bank account automatically sends another $25 to Starbucks. This makes the money flow constant. In a normal bank, if the economy looks bad, people might withdraw their money. This is called a bank run, and it's a nightmare for bankers. But at Starbucks, you can't withdraw your money. Once your $50 is in the Starbucks app, it's not money anymore in the eyes of the law. It's a prepayment for future coffee. You can't go to a Starbucks ATM and take out $20 in cash. You can only spend it on lattes and cake pops. This means Starbucks has 100% liquidity stability. They know that $1.6 billion isn't going anywhere except into their cash registers eventually. This gives them more financial flexibility than almost any mid-sized bank in America. While a bank has to worry about people wanting their cash back, Starbucks just has to worry about making sure they don't run out of coffee beans. Here is where it gets really shadowy. In some ways, Starbucks isn't just a bank. They are starting to look like a central bank. Think about what a central bank does. They issue currency. Starbucks has created its own digital currency, stars. You buy stars by spending your Starbucks credits. These stars have a specific value. Starbucks can change the value of these stars whenever they want. If inflation hits, Starbucks doesn't just raise the price of a latte from $5 to $6. They can also change the exchange rate of their internal currency. Suddenly, that free coffee costs 200 stars instead of 100. This is called devaluation, and it's exactly what governments do when they are in trouble. By controlling their own bank and their own currency, Starbucks has built a mini economy that is almost entirely insulated from the outside world. They don't need to worry about credit card fees as much because you're using their internal system. Every time you pay with the app, Starbucks saves on the 2 to 3% fee that Visa or MasterCard would usually charge. When you add those savings to the $1.6 billion interest-free loan and the $200 million in free breakage money, you start to realize that selling coffee might just be a side hustle. The real business is the bank. But wait, if this is such a perfect money glitch, are there any risks? In the world of finance, nothing is 100% safe. First, there is the regulatory risk. Governments are starting to notice that Starbucks is acting like a bank without being regulated like one. Actual banks have to keep a certain amount of reserves to prove they are safe. They have to follow strict anti-money laundering laws. Starbucks? They are currently treated as a retailer. If the government decides to reclassify stored value cards as bank deposits, Starbucks' brilliant business model could get hit with massive new costs and taxes. Second, there is the digital security risk. If a hacker successfully hits the Starbucks app system, they aren't just stealing credit card numbers, they are potentially accessing a $1.6 billion vault. Unlike a bank account, which is often insured by the government, your Starbucks balance usually isn't. If the app disappears tomorrow, your coffee credits might just vanish into thin air. Finally, there is brand trust. The entire $1.6 billion bank relies on one thing: you believing that you will want a Starbucks coffee tomorrow. If people suddenly stop liking Starbucks, or if a massive scandal hits, the deposits will stop, the interest-free loan will dry up. The shadow bank only works as long as the coffee shop is popular. So, what did we learn today? Starbucks is a masterclass in modern business strategy. They took a simple product, coffee, and used it to build a financial empire. They've turned their customers into lenders, their rewards into currency, and their forgotten balances into pure profit. And Starbucks isn't alone. Companies like Apple, Amazon, and even Walmart are all trying to build their own closed-loop financial systems.